Hello and welcome to another MCO market update on HBAR. On the HBAR chart, we're currently tracking potential B wave bounce to the upside here in the white scenario. That's a scenario in which the price could re-enter the support area that we've just left. Overall, what I really like about this chart is that the support area that we've been talking about since January has been respected. The price dipped into it, reacted to the 50% retracement, which is absolutely a common support level. Therefore, I'm not expecting necessarily that the price will dip into the support area again in a wider wave 4. That's why we have the blue scenario as well. It's just a reminder that we can, of course, if the market needs to extend this correction, it can easily do that, and it can take a long time. And then the wave 4 would just stretch out a little bit more sideways. But in the blue scenario, the price could go up straight away. And that's why we are tracking the micro support levels on the shorter time frames to understand if the market is holding support or not, And for now, the pathway higher is still open. We are pushing. The market has left the support area. We have many tutorials in our membership area about how to trade with Elliott Wave, and one of these strategies is about scaling into support areas. So if you scaled in with batches into this support zone, then you would now be in profits, basically adding as the price goes lower. Carefully, obviously, key is to keep it small as long as the market's still dropping, or you're catching the falling knife essentially, but not without a plan, right? You have a plan. You have levels and structure and risk management levels. And overall, the market has reacted and is now moving out of it. So you could just adjust your stop to break even if you like to do so. That depends on your skills, of course, and your risk tolerance. But it's impossible to say which scenario it is, right? That's why you want to manage risk. So it could be the white count in which we're moving up in a B wave. It could also be a more bullish one. But in both counts, higher would still be likely, because even in this B wave, we should push a little higher. I would say at least to the 28-cent level, previous swing high, seems a very reasonable target, yeah. What I would like to see next, as further evidence that a low has formed, would be a break above the upper boundary line of our trend channel here of the wedge pattern. And that's where we're now. So the price might find here some resistance in the short term, but a break above that level would be ideal. And then the door should open towards the 28-cent level. Now I'd say let's also take a look at the shorter time frame to see if anything exciting happened here on the smaller time frame. And if you watched the previous videos, then you see, you know the two pathways now, right? So we have here in the white count, we're tracking this ABC structure. That's the, you could say, short-term bullish, but overall little bearish count, right? Before we then go higher again. But yeah, I'm tracking here an A wave and a B wave and a C wave. So a 3-wave move up that could take us to around about 28 cents. That means if we get at some point a top here, break below the previous swing low from Thursday, that's at 17.5 cents. That should indicate a top of sorts is already in place. Then this would be our signal that a B wave pullback has started, and then from there a C wave rally could start, go higher. In the blue scenario, however, we're tracking a 5-wave move up. Well, that would be in line with the direct breakout scenario. But to keep this a plausible scenario, I want to see 5 waves up. And to call it a viable 3rd wave that we're working on right now, we should see the market push a little higher, potentially to 21.3 to 20.4 cents. So 3rd wave up, then a 4th wave and a 5th wave. 1, 2, 3, 4, 5. That's how we're tracking this. And I shared with you in the previous video that one more high would still be ideal. Price should ideally still form one more high to 21.3 cents. Pullback is corrective in 3 waves. That leaves the door open for higher prices. But careful, any break below the 18.3 cent level, previous swing low, followed by a break below the Thursday low, we can mark that level separately on the chart, I think would suggest that a B wave pullback is already unfolding, and the blue scenario will become, I think, less plausible. Why? Because the price would drop a little. Well, the price didn't reach the 138% extension. I think that's the problem, right? In the 3rd wave, we should get there, 21.3 cents. That's the update on HBAR. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, yeah, if you're interested in having a conversation about charts, you have some questions, requests, feel free to join our member live stream on Sunday. It's at 5 p.m. UTC. It's going to be busy, but markets are interesting, so we'll talk about opportunities, we'll take requests, we accept requests, and it's always a great way to connect. So again, that's on Sunday, 5 p.m. UTC. You can connect to the live stream, you can connect to the conversation, join the conversation rather, as a member. Yeah, thank you very much. Have a great Sunday. Bye-bye.